Good morning, everybody. It's Chris from Serene Education with the four majors in this update for the 18th of July 2013. Okay, so looking at the four majors this morning, using our FX8 Ultimate template on the MT4 platform in conjunction with our strategy template already on the charts, starting with euro against US dollar. Okay, so what happened yesterday on the markets? Not much in a sense. We had, yesterday afternoon, we had Bernanke testifying in front of the board, and he was pretty much repeating what he said earlier, but most of that speech was pretty much made up of people thanking him for his service. Apparently he seems to be leaving soon. If that's the case, remains to be seen, but a lot of the governors were actually thanking him for his services. So reiterating what he mentioned a week ago when he testified, that when we got this huge move here in the market, so nothing unusual. And what happened was we saw price failing to get above that 38.2 weekly fib. Ideally, I mentioned we would want to see price closing above it, and we didn't get that, unfortunately, as the US dollar gained a bit of strength yesterday after Bernanke's announcement and pulled back, and now subsequently still within this consolidative range. So trading within this consolidative range, we can see how price has not really moved that well, very indecisive, and you can see in the indicator box over here quite clearly showing that indecision on the actual time frame. Just move to the 4-hour time frames, you can see it. So the institution is back in play again. As I mentioned, we had the breakout, but we failed to see that pullback and that bullish engulfing candle continuation to the upside. And what we had was, during Bernanke's announcement, we had all these shooting stars, and eventually we had this bearish engulfing candle, and price has just been trading sideways since then, but within this consolidative range. Ideally, we want to be trading either the upside of this 38.2 with weekly or below the monthly. It's still above the monthly fib here, which is still a strong signal for euro. However, the more it continues to go sideways, the more likely we start seeing negativity and a revert to the downside. So very, very important. If this was to be genuine upside just recently for the euro, then we do need to see this weekly fib here at the 13,400 being breached as soon as possible, so we can see a continuation to the upside. There's a lot less noise to impede price moving higher once we get above this the 38.2 towards our daily 23.6 mark. In fact, from this level to that current high, there's 160 odd pips for to be taken. So consolidative range at the moment now. Ideally, not trading it. I want to see a nice genuine close, either upside or downside, before I take a different stance. Sterling, here again, you can see that more negative sentiment here, and you can see that there's true selling in this particular. Well, there's true sentiment. The R squared is positive intraday, and because you can see that true sentiment is the selling sentiment, because you can see that all our indicators on the intraday time frame are showing it short or negative, and this R squared is there to complement the sentiment. Is a genuine sentiment. This is the only indicator that needs to remain positive, all regardless of what price is doing. And what it's doing, though, you can see that negativity here is yesterday's candle moving or heading into the 23.6 weekly and closing above. However, on the Asian session, you can see we're pretty much trading back below that level again. So overall, if this is to be genuine positiveness for sterling and negativity for the US dollar, we want to see price closing above that all-important monthly fib. You can see quite clearly this blue line over here is my monthly fib, which constitutes the 15,300 mark, which is that major support and resistance level that goes back to 2010, as I mentioned. So on a 4-hour time frame, you can see that price making an attempt at those highs yesterday on the weekly, also the daily. You can see the daily fib over here also complementing that weekly. So there's a lot of resistance here, guys, and it's imperative now through this session that price maintains above this area here. The moment she falls back below again, you can see the swing highs depicts upside, swing high, swing high, swing high, swing high. In this area, we're going to see some movement. So look to see if there's anything out this morning for sterling. We have retail sales month-to-month figures this morning at 9 a.m. GMT for the UK market, and then this afternoon we have the unemployment claims. We have Mr. Bernanke testifying yet again today, and then we also have the Philly Fed manufacturing index figures. So we could see this afternoon, primarily on the 4-hour, potentially some upside regarding to what might be said by Bernanke in his testify this afternoon, or a lot of exhaustion candles here. If we do get a bearish engulfing candle, that would refer to the fact that we should be looking back to the downside again, with the daily fib over here at the 23.6 as our first target, which would be in excess of roughly 130 odd pips before we start looking at the long-term support and resistance level down here at the 148500, which was that support and resistance level or consolidation level back in 2010. US dollar Swiss franc. Here again, you can see that the US dollar losing a lot of ground after Bernanke's announcements a week ago, and after yesterday's announcements, seeing a bit of positiveness on the market. A hesitation candle, a spinning top, coming at the institution moving average. So taking a breather. A lot of selling recently, taking a breather, and on the Asian session last night, the US dollar gaining a bit of strength against its Swiss counterpart. In doing so, testing the 50% retracement from the low that we've had recently to the current high on the daily fib. Okay, you can quite clearly see the daily fib being drawn from my low to my current high. You can see the 23, the 38, the 50, the 61, and the 78.6. You can see the 61.8 complements the institution moving average, and the 50% complements price support and resistance. So imperative, this is to be positives. You can see the positiveness intraday for the US dollar against Swiss franc. Then we want to see that the 50% fib retracement intraday, i.e. on off 1 hourly, maintains as a support level. Price support, new resistance, and you can see the 4-hour candle now. We have another 80 minutes, an hour and 20 minutes to go before we see this 4-hour candle close. If it happens to close higher than the 50%, then ideally we want to see a 1-hour bullish engulfing candle. If I go to my 1 hour, confirming a nice bullish engulfing candle here, that would constitute that we should be looking for upside. And then what we can do is target from the 50 back up towards our daily 38.2 fib retracement area, which if you take the 2 lot is good 73 pips away. So if you wait for it, you can still walk away with a very nice genuine profit on that. So imperative to see price maintaining above 50% retracement for the morning session, i.e. the European session, and then going into the US session. Be well aware that we've got that the news, in particular unemployment claims, but we also have Mr. Bernanke talking. So consolidate any profits you might have made, because things tend to go sporadic or indecisive or speculative when Mr. Bernanke talks. So US dollar Japanese yen, the last pair of the day, you can see here yet again we saw US dollar climbing very, very aggressively against the yen recently. However, after Bernanke's announcements last week, we saw price falling back below the 50% retracement on the monthly, which pretty much made it more negative. Then we had a bearish engulfing candle not too long ago. However, the sentiment's still wanting to move higher. And after yesterday's announcements, price testing the underside of the 50% retracement line. But on the Asian session, huge movement. A lot of intraday support for upside. And sure enough, the candle as we speak now is trading on the daily above the 50% range. However, we'd ideally like to see a nice bullish engulfing candle close higher than that. Then what we would do is we'd start targeting the prior swing high, which is at 101.51.6 and change. And then break of that would see price, or like to see price, heading all the way up to the zero line or to the prior highs we saw back in May of this year. So moving to our 4-hour time frame, would like, you can see the last 4 hour closing above. Now you can see that price is now testing the prior consolidation high that we saw on the 4 hour back on the 15th of July. So moving into that level there, and to be honest with you, where price is trading right now to that level is a good 13 pips. So too much risk for very little profit. So ideally look for the next 4 hour candle to close higher than this, and then look towards or head up towards these highs over here that we saw at 101.51 intraday. But be aware of today's announcement this afternoon. So trade with a very tight stop, just in case if any had to happen when Bernanke talks and it goes against you, that you've actually banked some of those profits you made to the upside. That's it, guys. Short and sweet today. Please, if you are using this template, back it up with sound money management rules. Keep it simple. Be aware of your monthly support and resistance levels to complement or look to actually complement your trading style with the intraday. It'll give you a good heads up of where price is likely to go to. You can work out your money management far easier, and As I mention all the time, just keep it as simple as possible. Otherwise, have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.